Hey, it's January 2026. Your first paycheck may have just hit the bank account. Don't just archive that email. Let's open it up and take a look at it. This is the best time of the year to check out 3 simple things and do a paycheck audit. Step 1 of your paycheck audit is going to be reviewing your 401k contribution for the year. 401k contributions increased for 2026 up to a maximum limitation of $24,500. And if you're over 50 and a half, you get an additional $8,000 catch-up contribution. So if you haven't adjusted this from last year and your paycheck was set to just maximize up to the prior $23,500 limit, you're going to want to go ahead and review that and update your contribution amount. An important note here, because we have some clients that love to front load their 401k contribution for the year. If you're one of those people, congratulations. That's great to get it out of the way early in the year. But just make sure that your employer has a provision in the 401k plan that allows for a true-up computation at the end of the year. This is important because some employers will limit the employer contribution to maybe a maximum of 6% of whatever your paycheck is early in the year. So if you've contributed a whole lot of extra contributions to the 401k plan early in the year, they may only be matching up to the 6% of your salary and wages. And if there's not that true-up provision to come back later in the year to take care of that, you could be missing out on thousands of dollars of important employer contributions. So make sure you know the difference between that if you're doing an early contribution. Step 2 in your paycheck audit is going to be reviewing any potential health savings account or HSA contributions for the year. It's important to know the difference between flexible spending accounts and HSAs, first of all. If you have a high deductible health plan, chances are you have a HSA or health savings account. If you don't have a high deductible health plan, then you've probably got the use it or lose it flexible savings account or FSA accounts. FSAs, typically you can't change the contribution limit outside of the enrollment period unless you have some kind of life event, like a new family member or things like that. But HSAs are different. HSAs, you can make contribution changes throughout the year. And so if you've forgotten to top off your HSA for the year, the contribution limits for 2026 are $4,400 for self-only coverage or $8,750 for family coverage. And there is an additional $1,000 catch-up if you're 55 or older. So double check that you're meeting the contribution maximums for that HSA. And the bonus tip, HSAs allow you to roll those amounts over from year to year. So if you're looking for an extra savings vehicle, if you're already maxing out 401k and retirement plan contributions, your HSA can sit there and grow year after year. So that's an important benefit to take advantage of if it makes sense for your family. Step 3 of your paycheck audit is going to be checking your withholding. And this is not only federal withholding, but state and local. If you've made some changes to your withholding in the past, let's say you've added some additional withholding over top the standard withholding, now is a time to review that and double check if that's still applicable for 2026. Another thing that happens for our clients is often there'll be a family change in circumstances. Let's say you got married this year. Now is also a good time to double check the withholding, especially if both of you are employed. You might find that you're in a higher tax bracket this year and you might want to reconsider your withholding rates. Another item that will often trip up our clients is state and local withholding. As I mentioned earlier, this is just as important as federal withholding, especially if you've moved locations recently. Did you remember to notify your HR department? If not, now is a good time to remind them. If they're still withholding your withholding state from your previous residence, now is a time to double check that. There's nothing worse than getting to the end of the year and you've moved from California to, let's say, Nevada, and they've been withholding California tax all year round. That's all that additional cash that you could have been using all throughout the year. That's now going to trigger a little bit more scrutiny when you file that California return at the end of the year. So double check that withholding. And if you don't understand some of the items in your paycheck withholding, please reach out to your HR department. I hope these 3 tips have helped for your paycheck audit here for January 2026. If things are still looking complicated, if you feel like you need some help, please reach out to us. Check for our link down in the bio, schedule an intro call. We'd be happy to talk.